And so I think it's very dangerous to be naked short right now. And ultimately, prices go higher than people think possible. The public has no idea because the media hasn't told them what's going on. No one knows that gold was reclassified tier one. No one knows that the central banks have bought any more than any time ever. No one understands this. So they're not prepared. And when it is set free, when the price really takes off, when the manipulation on the Western markets breaks, not only will you see an amazing realization that, oh my gosh, it's higher than I can ever imagine, but ultimately the price setting will move eastward. Because I think the COMEX and the LBMA will be looked at like Bernie Madoff, a system that worked just fine until everyone stood for delivery, and then they realized they were being scammed.
Rehypothecation is a practice where banks and brokers use assets, such as gold and silver, posted as collateral by their clients to back their own trades and loans. This practice can lead to a situation where the same physical asset, like gold, is pledged to multiple parties, creating obligations that exceed the actual physical supply. This leverage enables larger trading volumes, but can distort the true availability of the metal in the real world. Meanwhile, central banks globally have been aggressively acquiring gold, driving prices to record highs. Over the past 18 months, China alone has accumulated over 300 tons of gold, valued at $561 billion. According to Andy Schectman, central banks recognize the intrinsic value of gold and often hold it in special accounts like the gold revaluation account. This underscores gold's role as a stable store of value compared to fiat currencies and treasuries, which are susceptible to devaluation. Despite sophisticated manipulation and short selling on Western exchanges designed to keep gold prices low and maintain confidence in fiat currencies, the demand for physical gold continues to rise. Manipulation in these markets involves massive short positions and trading gold contracts, far exceeding the actual physical gold available. This practice keeps prices artificially low and maintains an illusion of stability in Western currencies and bond markets. However, countries are increasingly demanding actual metal rather than settling for paper contracts, signaling a decline in trust in fiat currencies. Andy observes that as the manipulation unravels, previously suppressed gold prices are likely to increase significantly. Recent trends indicate that while Western markets have traditionally controlled gold prices through leverage, real demand is shifting east, especially toward China. The Shanghai Gold Exchange, for example, has seen a massive increase in volume, indicating that price setting might soon move away from Western markets. As gold prices rise due to real demand and the unwinding of leveraged positions, fiat currencies may decline further, potentially driving higher prices. We will present clips from Andy Schectman's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The amount of rehypothecation and leverage that we see on these exchanges is playing right into the hands of the rest of the world. And 30,000 contracts stood for delivery in the June delivery month, 100-ounce contracts, and which is a lot. But this is what we continue to see. It's interesting, if you look at every central bank balance sheet, gold is held in an account called the gold revaluation account. I think there is a realization by much of the elite that the central banks that gold is money and that dollars and treasuries are on their way out, that we need to have trust in a system that's lost it. And the only way that you'll ever get gold backing a system is to have the prices much higher than they are right now. So 3,000 to me is low to where it will ultimately be. So yeah, I think that's quite realistic. And at $3,000 gold, where do you have silver? If you realize that silver and gold have had a 42-to-1 average price relationship for the last 100 years, even though it's coming out of the ground at 7-to-1, 3,000 divided by 42 is $71. That if we had $3,000 gold, the average price relationship between silver and gold of the last 40 plus or 100 plus years would be $71. And if you took 3,000 divided by 7, $428. Is that crazy? I don't know. You tell me. That's what it's coming out of the ground at. Even at 2350 divided by 7, you end up with 335. So I think metals will go higher than people think possible. It is because it is distorted by a handful of commercial banks that have these massive concentrated short positions, where on the London Metals Exchange, you have 20 million ounces of gold trading every day, but they tell us those numbers are 10 times understated. So 200 million ounces of gold traded every day, and which would be 2.9 billion ounces of silver every day. That's 3.5 times global mine supply. These Western exchanges, which were built to, in essence, keep the price of gold and silver in check, which would allow the world to believe that the Western bond markets and the Western currencies were indeed stable, strong, and secure, because the canary in the mine shaft would be gold and silver. The constant rehypothecation and naked shorting, this leverage to the downside, has enabled the West to control the prices. But the countries that are standing for delivery were never sophisticated or coordinated enough or wealthy enough to do this. And now they are, and this is how they win: by draining the exchanges, using this fugazi price where these countries, or these banks rather, can naked short tremendous amounts of contracts with nothing behind it but the ability to print more money and short more. But that doesn't dissuade, like you were saying earlier, with the positive real yield. These countries don't care about any of it. They just want the physical asset. And so I think it's very dangerous to be naked short right now. And ultimately, prices go higher than people think possible. And that's another thing, is that, the public has no idea because the media hasn't told them what's going on. No one knows that gold was reclassified tier 1. No one knows that the central banks have bought any more than any time ever. No one understands this. So they're not prepared. And when it is set free, when the price really takes off, when the manipulation on the Western markets breaks, not only will you see an amazing realization that, oh my gosh, it's higher than I can ever imagine, but ultimately the price setting will move eastward, because I think the COMEX and the LBMA will be looked at like Bernie Madoff, a system that worked just fine until everyone stood for delivery, and then they realized they were being scammed. So to have an exchange like the Shanghai Gold Exchange, where volume has increased to over 200% in the last 75 days, making it the second most vibrant, or the second most volume of any commodity exchange for gold on the planet, surpassing the COMEX. And now gold is the second largest asset in the central bank holdings. Little by little, it's happening. People aren't noticing it. So when it goes like that, they'll be like, oh my God, what just happened? The guys like you and I and your followers will be like, well, it's taken so long. Why? And that's because they're methodical in the way they do it, the accumulation by the world's central banks, and it's being fought by the West using suppression and over leverage that will ultimately end up very badly for them. So closer than we've ever been and higher than people can imagine would be my take on where it goes and when.
The US national debt has skyrocketed to a staggering $34.7 trillion, from $23.3 trillion in January 2020 to $27.6 trillion in January 2021. This rapid increase, exacerbated by perpetually low interest rates that distort asset prices, has severely undermined what was once a robust economy. Adding to the economic strain is the resurgence of talks about de-dollarization, fueled by recent data from the US Treasury Department. This data revealed that China unloaded nearly $50 billion in US Treasuries in the first quarter of the year, reducing its holdings by over $100 billion through March 2023. These actions reflect a growing global distrust in the stability of the US dollar, exacerbated by geopolitical maneuvers like using the dollar as a weapon in conflicts, as highlighted by Putin. Such tactics underscore significant hypocrisy in global financial policies, eroding the US's long-standing reputation for financial integrity. In response to these challenges, Andy suggests that gold is increasingly seen as an investment and a crucial tool for wealth preservation. Central banks globally are rapidly increasing their gold reserves, making gold the second largest asset in many central bank portfolios, surpassing even the euro for the first time. This trend reflects a significant reevaluation of secure monetary assets amid today's volatile global financial environment.
Massive debt. But I mean, to me, the debt is kind of the sideshow. Yeah, the debt, it would be a reason for people. At some point, the debt has to matter, right? And interest rates that have been suppressed forever, that have created distortions in asset prices, all these things have to matter. We once had a very thriving economy. I think it's been brought to its knees by things like political corruption, manipulation of the news, inflation, the printing of money that gives the illusion of a thriving economy when you see just a handful of stocks pushing the whole indice up. And you realize that the Russell 2000, as an example, which is a much broader indication of the economy, most of it's underwater. If you spent $100 every second of every day, it would take you almost 2,000 years to equal just the 6.2 trillion we've spent in the last 12 months. This is the kind of, I don't know, excess spending, and you mix into it the meddling in affairs of other nations that I think accelerate the decline of the dollar. You're seeing countries like China unload $53 billion in treasuries a month ago. You're seeing what's happening all around this country, politically, socially, morally, all of these things, they all have significance. But to me, none of it all pales in comparison to the betrayal of trust. As Putin described where we are right now at this meeting recently that he had in Novograd, he came out and said that the Bretton Woods system is dead and that the dollar is backed by nothing other than trust. So I think if you're not a contrarian right now, Danny, you're damn well bound to be a victim. And I don't look at gold as an investment. To me, it's wealth. And not only is it the only other tier one asset in the world as reclassified by the most influential bank on the planet, the central bank, the BIS, but it's being accumulated by the central banks at levels the world has never seen. And in terms of international reserves, it's up to almost 18%, which is the most in almost 30 years. And it's the second largest asset now held in central bank reserves, surpassing the euro for the first time ever. So it's slowly gaining traction, but only with the central banks, right? So the people in the West are asleep as the central banks are literally accumulating everything that's not nailed down using the Western paper price, the suppression of it, the massive leverage of the Western markets to drain the exchanges, delivery cycle after delivery cycle when no one's paying attention. And you see, everyone's invested in NVIDIA and Apple and Bitcoin. At the same time, they're missing out on what is a shift of, I think, a shift of what is considered money. I think gold, it has been remonetized in most of the world. It is now replacing the treasury because it can't be confiscated, because it can't be defaulted. Just all of those answers that you gave, in essence, what the question should have really said is, do you feel that gold, in essence, replaces the treasury market? The treasury market, if you look at the 10-year treasury, gold has doubled its performance for the last 25 years, doubled. And it has no counterparty liability. It has that historical significance. It can't be inflated away or defaulted upon. It is now the second largest asset in central bank holdings. It is the only other tier one asset in the world. And I think when you realize and look at it that way, a country that should be clinging and nurturing its world reserve status as a privilege, we've done everything we can to shed it and lose it. So it's not even as much gold as it is the dollar. And unless you think the dollar will spike in value for some reason, then holding gold right now has never been more important and probably carrying the least amount of downside risk, even though we're at or near all-time highs, because I think the dollar, in essence, is getting close to, the ninth inning or maybe the end of the ninth inning in terms of its run. And gold is just being, I think, these central banks are recognizing gold once again for what it truly is and what it has always been, and that is, wealth.
As global economic dynamics evolve, the gold market could experience significant changes. Increased demand for physical gold in Eastern markets, notably China, may diminish the impact of traditional Western market manipulations. This shift could potentially drive substantial price increases as market forces align more closely with genuine demand. Share your thoughts on Andy's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.